Pleasant morning. Hearty greetings from School of Management. This is Professor Irshad Ahmed, School of Management, organizing chairman of this international e-summit on performance measurement of small and medium-sized firms. It gives me an immense joy and fervor to invite all of you to this August scholarly assembling. School of Management, a department of MBA with nearly a decade of its existence in the field of Indian management education, has created an exceptional reputation for nurturing and transferring young minds into budding entrepreneurs. The MBA program of School of Management is a flagship program which offers breadth and depth necessary to succeed and make an immediate impact in today's highly competitive world. Our program consists of core courses in the fundamental areas of management, an elective in the areas of marketing, finance, human resources, operations, and system. It aims at equipping students with an ability to question assumptions about businesses and to make informed decisions. Although the course is necessarily academic in orientation, it aims to build professionals with innovation, dynamism, and flexibility required to excel in all settings. Dear participant, in this cutthroat post pandemic situation, a business organization could measure its performance using the financial and non financial measures. The financial measures include profit before tax and turnover, while the non financial measures focus on issues pertaining to customer satisfaction and customer referral rates, delivery time, waiting time, and employee turnover. This e-summit provides a premier platform to interact with researchers, practitioners, educators, and students to learn the most recent innovations, trends, and concerns, as well as practical challenges encountered and solutions adopted in the fields of performance measurement. The major objective of this e-summit is to know how firms apply various accounting indexes and measuring the performances. The outcome of this summit is to highlight the importance of using performance measurement in assessing productivity, supply chain, and cost effectiveness within a cost center and the organization as a whole. On behalf of C. Abdul Hakim College of Engineering and Technology, I extend a warm welcome to all the academicians, research scholars, and students from various colleges from India and abroad who have connected today with us digitally for this international e-summit. I also extend my greetings to our principal, Dr. J. Bhaskaran, and Dr. E. Nanashekaran, HOD School of Management, for their guidance and support. I always take the pleasure of welcoming my colleagues, first and second year MBA students, and friends for their participation. My dear participant, today we have a well-known guest speaker, Dr. Chong, who will share his insightful thoughts on performance measurement of small and medium-sized firms. Dr. H. Chong, professor of accounting at Prairie View AM University, is best known for his research work on audit risk and materiality, earnings management, ethical and compliance issues, fraud and forensic investigations, health and safety insurance accounting, measuring firms' performances, and oil and gas accounting and auditing. He has developed an oil and gas accounting course, an intermediate international accounting course for the undergraduates, and an international accounting course for the graduate students. He has presented many papers at national and international conferences, published over 100 scholarly publications, and received several external research fundings and awards. Dr. Chong has an industry experience and taught at a university in the United Kingdom and was trained and worked with one of the big four firms of accountants. He holds a visiting position at a university in China. Apart from teaching and research, Dr. Chong is the director of executive MBA program at the College of Business. This program catered for junior executives, managers, and business leaders with 3 to 5 years of experience. With this short note of introduction, let me be pleased to read the requirements for the participation in the smooth conduct of the session. Dear participant, make sure that your laptop, desktop, mobile phone time is incompatible with Indian Standard Time, ensures strong internet access, and stay away from disruptions. Use microphone with headset and appropriate stationery such as notepad and pen. Post your queries in the YouTube chat history. Upon successful completion of the event, the feedback link will be shared in the YouTube chat history. The participant will receive an e-certificate after submitting the feedback in their prescribed email ID. Your kind cooperation is very much anticipated. Now, may I ask Dr. Chong to begin the presentation, please? Thank you.
Thank you so much, Dr. Isha Ahmad, for inviting me. Good morning, everybody in Melwest Shiram in Palimaru, okay, and in India. I am so proud to meet up with all of you. I'm so grateful that the invitation is here. Today, I'm going to share with you about how to measure performance. And lots of you have already heard about performance measurement. I'm talking about performance measurement in the accounting perspective. Right. Let's start off with the today's presentation and discussion. Right. The objective for the presentation today is to understand how firms apply accounting indexes in measuring their performance. And the learning outcome from this particular presentation is to learn how firms measure their performance and to appreciate challenges that they face in using the indexes, and also to understand the importance of performance measurement in logistic audit, unbiased assessment, and also to look into the supply chain, including the supplier and customer relations, planning procedures, as well as document flow. Also, we're going to touch on the next one is on productivity and cost effectiveness, and the last objective is look into the cost center indices. Now, I won't be able to cover all of them, but I will try my best to touch on as much as I can. Right, let's move on. The main key area that we're looking at is the managerial accounting. Now, what exactly managerial accounting is emphasizing on? These are the three keywords that we need to understand and to know of when we do managerial accounting. Now, it is meant for our planning, control, and decision making, right? So basically, we have planning about doing something that is a set or target, to control, to evaluate the cost and the performance, and then we make decision, take immediate action, or making future plan. Obviously, once we have done it, we go back to the loop on planning and go back and continue the loop. And let's focus on performance measurement for our discussion today, right? This is managerial accounting as a whole, right? We can use it for budget, break-even point. All these are meant for planning, control, decision making. That includes performance measurement, right? What exactly is performance measurement? It's a process of collecting, analyzing, or reporting information regarding the performance of a particular cost center. Now, so what is a cost center? It is a unit that involving costs, right? As long as there is a dollar sign in there, rupees or whatever it is, right? The dollar value is in there. That is a cost center. Now, a unit is an individual, a group, organization, a system, facility, or component. Now, what does it mean? It means that anybody, including, say, I'm a janitor. Now, if I'm a janitor, you have to pay me, right? So there's a cost involved. Now, as long as a cost involved, I am a cost center. Now, what about a group of companies, a small group of organizations, a system itself, the facility is within in India or outside India, right? So these are facilities, components that, that involving cost to maintain. Now, all these will be part of the measurement that we are going to include in and will be part of the cost centers, okay? Right. Now, what exactly the cost center, again, when we're talking about the three keywords, planning, control, and decision making. Let's start off with planning. What is it meant for? We set the target. Now, once we set the target, we have got to evaluate the target. Are we heading on the right direction or not? We constantly review the results and achievements and whether there's any add value of the process. If not, then we have to take action. So back to the key theme of managerial accounting, we plan, we control, we make decision. Right? Plan, control, decision. These are the three key areas of managerial accounting. So it applies to performance measurement as well. Okay. Now, how would we apply performance measurement in the real world? Okay. Where about are we going to use it for? Supply chain, when we do the contracts, when we do projects, production, inventory management, right? Because we have got involved in economic order, quantity, logistic audits. Now, at the end, we are talking about strategy, right? For example, we make use of the balance scorecard to help support all this. And also we look into the human resource. Now, I put this one as the last one because it is involving individual. If you look at the first, all this on the top here, from supply chain all the way to strategy, it's much more to do with the firm, organization. Okay, sorry, I go back again, okay? Now, what we are referring to is very important in the sense that, we want to look at, okay, how are we going to arrange for our performance and how would the performance to be looked at when we look into the environment as a whole, okay? Right. Group or a company that we have the target. Supply chain, all right, okay. Let's move on and take a look at a balance scorecard, right? Every one of us have quite familiar with balance scorecard, and the balance scorecard we are referring to is basically talking about, right, we have got 4 different spectrums, okay, or perspective or areas. We look into the financial, we're looking into the internal process, we look into the customer perspective and the learning growth. Okay. So these are the 4 key areas that we are referring to when we come to the balance scorecard. Now, it's quite balanced in the sense that you look into the financial perspective as well as the internal and external, then the long-term process of learning and growth. Let's move on to the next slide. Okay. Now, let's dive in and look into the balance scorecard in much more detail. Okay. Now, again, there are 4 spectrum we are referring to: the financial, customers, internal process, and learning and growth. Okay. Now, what I'm trying to do is financial. Normally, it is a short term. Okay. How short is short is basically within 12 months because typical accounting, right? We prepare accounting financial statement for the next 12 months. Now, customers. Okay, what are those relating to customers in the balance scorecard we are talking about? The customer's satisfaction, areas that we need to improve on our items and goods. And for example, how are we going to measure customers? The percentage of sales from new products, right? New products that come out, and what are the share of our purchases, okay, and the delivery, as well as the ranking on by the customers, the feedback that we receive from them. And then the next area in the balance scorecard they refer to as the internal process. Now, that means how are we going to excel ourselves, right? How are we going to improve our cycle time? How are we going to improve our unit count and the cost? What about the yield? That means the results. What about new products that we are going to introduce into the market? Okay. Now, so that's why I put it into a short and a medium term type of evaluation. The longer term, right, is learn and growth. These are basically, we continuously learning.
Dr.
Yes.
Chong,
yes.
Your screen is not incompatible with the presentation. Like, can you just, because we have one. Yes.
Right, let me go back again. Can you see my screen now?
Yes, yes, yes.
Sorry about that. Okay. Does it work?
Yes.
Can you see my screen?
Yes, yes. Can you minimize the screen now? Like, minimize the slide. Zoom out. Can you zoom out this slide? Zoom out.
I cannot. That's all I can do. Sorry about that. Okay. Right. Come on. Let me Okay. Sorry about that. Okay. But my screen is over. It's okay on my screen. Okay.
No, it's okay. It's okay.
Okay. Right.
Thank you. You can continue. Thank you.
Can anybody see me or anything? I'm sorry about that. Okay. I do not know what's going on. It shouldn't have any problem. It was working very well. Okay. Now, basically, let's continue with the conversation, and then we talk about how are we going to measure the performance. Okay. Can you see my screen now?
Yes, you can proceed. You were there in slide 6.
Go back a bit. Okay, sorry about that. Okay, the screen seems to be jumping about. Oh dear.
Okay.
Let me go back. Take a look at the previous screen. Oh no. Okay. Can you see the screen now? On
Yes,
balance
you can continue.
okay,
You can continue.
Okay, that's good.
Thank
Right,
you.
okay. Right. So, what happened now is we have got all these 4 spectrums. I do apologize for the, problems in the technology. Now, the medium term normally is 1 to 3 years. The long term is 3 to 5 years. Okay, that is the normal way of measuring. But it varies from firm to firm, activity to activities. Right. Let's move on. What is financial? Okay, what we are talking about are those items that you can get it from your financial statement, your profit or revenue, your capital, assets, or sales, inventory, cash. Okay, and also a combination. Even your share market or your capital market. Right, anything that you want to use it for your comparison is all in your financial statement. Okay, PE ratio and all this. Okay. Now, normally the financial indices are meant for short term because normally when we prepare accounting, the financial statement is for 12 months, it could be for 8 months, could be for 9 months. Okay. Now, what about non-financial indices? So that means we are talking about non-financial type of variables. Okay. So I make life easy, right? I normally use Pesto, PSTL, right? It may mean for something else, okay, but I normally use it as to help me to understand, right? It could be meant for political stability of the place or the location. We look into the economic situation, right? Is the economic situation is boom or bust? environment. Now, are we having any social problem in terms of customer behavior? Because customer may change their behavior, their preference, their attitude, their color, right? Their taste. So, that will affect our performance evaluation. The technology that we have introduced in the past, we have been very labor intensive. Now it is robots. Okay. In the past, we used gas. Now we're using electric cars. Right. So these are technological changes. Environment and employees. Are we focusing very much on looking after the protection of the environment? What about employees? Okay. Some firms, they focus very much on sustainability, right? But some do not. So this could be one of the measurements that you can use it to measure your performance. And the legal and the regulatory requirements, some organizations, they have got internally, they have got lots of bureaucracy. Some countries, they have got lots of regulatory requirements. All these will impact upon the firm's performance. And when you come to measurement, you have to compare, if you can, compare like to like. Okay. So lots of firms nowadays use financial and non-financial performances and for their evaluation process. Okay. Right. Now, let me go on and take a look at why we are going to use it, all right, for these indices. We use it, make sure that it is consistent so that we can do comparison, right? Now it is a control part. Okay, just now we do the planning. Now we're doing it on the control. The control is on comparing. Comparing with what? Budget, last year's results, or last period results, the sector as a whole. Now, so that's why, once we do the comparison, we can make the decision. Now, obviously, we have got to consider about any major changes in the environment, okay, the working environment. Now, instead of working, 12 hours per day, now we're going to change it to 6 hours per day. Right? Instead of, from 9 to 5, we are going to change from 7 to 4 or whatever it is, okay? Because of COVID, people working from home, there are people working remotely. So these are the changes that may taken place, and we have got to be extremely careful when we come to the comparison. Bureaucracy, maybe a new law coming out, right? New tax system, right? Taxation may change, the tax law may change, the currency exchanges may change. So what we're looking at is not only comparing internally when we do the indices, we have to compare and look into what are the external factors. Okay. Now, as long as we do it consistently, we are fine. Okay, so let's move on. Let's focus on what we are doing now in my study. Okay. I focus on one particular small area of using ground theory. So what is a ground theory? Okay, basically, we are going to make use of the theory, and then we try to evaluate and using the data and to test the theory again. Okay, that's called ground theory. Now, what I have done is I have conducted some in-depth, very in-depth discussion and interview with 5 owners. I select only 5 owners, okay, in Houston, in US. It was down back in 2008, about almost 12 years ago. So what happened is, what is grounded theory? It is a research method that trying to find out whether theory come from data or data come from theory, okay? Now, for these 2 scholars, right, they started off the idea that, right, it must be from 2 distinct sort of area of approach, right? Laser, if you look at it, right, it started off, everything must start from data, only then you generate into theory. Then eventually, Strauss, okay, initially they plan out, right, should be from data to theory, okay? But Strauss broke off, right? He said, no, it should be the other way around. It should be from theory. With the theory, only then you can generate data. Well, sometimes it may work, sometimes it may not, okay? Now, for me, I said, no, basically, it should be a both-way traffic. I call it hybrid approach. In what sense? Basically, It could be from either way, theory or from data, or data come up to theory. Okay. So the same thing happens to whatever research we are doing. It shouldn't be only focusing just on based on theory. If there's no theory, we can't get data. If there's a data, we cannot come up with a theory, right? It should be a two-way traffic. I call it hybrid approach, and this one is highly recognized now. And I have got about almost 300 over references, okay, according to Google Scholar. It's quite highly sort of referenced in many research papers. So what I've done is I look into the literature review. I look into the financial measurement and non-financial measures. Okay, and the areas that we're looking at is profit, revenue, returns on investment, sales, as well as returns on equity. Now, what about the financial measurement we are looking at? They are very objective, very simple to apply, easy to understand, because everybody should know what is a return, how much is a profit, how much is this one, right? But the problem is it is based on historical data, okay? The profit that we had earned is in the past. How much is a return in the past? It is very historical, and it may not be available in the public domain, right? Especially small and medium-sized firms, you can't get hold of their financial statements. And also inaccessibility, confidentiality, incompleteness, right? And there is a possibility of lack of accuracy and timeliness. Because by the time when they produce a financial statement, it could be about 3 or 4 months later, right? Even though the end of the year is December 31st, you don't get the financial result immediately. It could be about 2 or 3 months, 2 or 3 weeks later. Okay? So it's out of date. Now, so again, profit are always subject to manipulation. Okay, and those of you are very familiar with accounting, right? You have got all these accrual and financial terms and jargons that lots of people have got problems with interpreting the what actually mean accrual. What does it mean? Equity, right? It's very confusing. So what I've done is I look into the other areas, non-financial measurement. It could be including the number of employees, the turnover, the growth in the revenue across the line, and the warranty and returns, market share, as well as revenue per employees. Okay? And this will help us to find the effectiveness, fine-tune them, right? The effectiveness and efficiency in using the resources, how competitive we are. Are we ready to face any competition? Are we ready to move forward or not? Okay. Now, if possible, right, we try to use the the measurement consistently from one period to another for comparison purpose. Now, so what we have done is we review and update the measure, ensuring that they are still relevant, because every single time things may change. We talked about PESTEL just now, and things may change, right? Environment change, people change, technology have changed. And the stockholders' needs may change. And also we have got to make sure that it fits into the internal planning and targeting settings. Right, so let's move on and dive in. What have we done? Okay, the methodology. I'm talking about the methodology in general. Okay, so overall, there are 2 key areas of doing the research. One is based on questionnaire surveys. Okay, so this will be, you normally can get a good response, large responses, but whatever you ask them, they'll tell you. Okay, it may not be in-depth understanding of the issues. You ask them question 1, they respond to you, answer question 1. You ask them 5 questions, they respond to you 5 questions. And a lot of time it is incomplete because the question is too vague, or they don't have time to finish the question. Then they just return to you and they respond it quickly, right? Now, on top, the other part is we look into interviews. How are we going to do interviews? Okay, I use the first one, is called structured. Very structured means you ask the very specific question on the right down on the interviewing sheet, and the interviewee are not allowed to add or interrupt any of the interviewing process. So you ask them, right, what is the color? They say blue. Okay, that's it. Then move on. Right? Keep asking the sort of question, a set of questions that you may have. Don't allow them to elaborate. Now, what I have done for this particular research, I use a semi-structured interview. Okay, I ask them, what color do you prefer? They say blue. Why? How come? What about other colors? I move on. All right. So basically, I ask the same question. I ask them in much more detail. The same thing happened to when I ask them about performance measurement. Right? They say, oh, I'm going to use sales. I say, why sales? What type of sales are you talking about? Is it sales within India or outside India? Are you talking about sales before any return, or is it after returns? Okay. So I ask them to elaborate, illustrate, to make sure that I am very clear and they are very clear in terms of what are their measurements. So I call it semi-structured interview. Now, so I conducted about 5 key semi-structured interviews, right, in Houston about 13 years ago. Now, what does it mean small and medium-sized firm? Those firms with 10 to 50 employees. Okay. I knew that there are lots of research going on for the large firms, but I'm not interested. I want to know what is going on for the small and medium-sized firms. How would they be able to survive? How would they measure the performance? Okay. Now, so I give them the opportunity, to know about the question ahead of time before I interview them. And when I've done the interview, right, I come back to the office. I identify keywords that they are talking about, right? Now, for all the 5 interviews that I have done, I ask them whether I can take record the conversation or not. The answer is no. I said, okay, I sort of observe the confidentiality, and I don't insist of recording it, but I take notes. Okay, so once I've taken notes on the interviews, I return back all the notes that I written for the particular person. I ask them, have I missed anything? Have I made any errors? Is there anything that you want to add? Is there anything that I should delete? Okay, so I go forward and back with them. So that's why it takes a lot of time, even though you just look at it, only 5 interviews. And as I say, I give them a choice whether you want me to interview in the office or outside. Now, most of them, they prefer for me to interview in their office. The reason is because while I'm doing the interview, they can still continue working and supervising the production line. They can still answer phone calls, all right, and they can pull out information that they may need and share with me. Okay. So I say, okay, whatever it is, it's up to you, right? I'm flexible, and as long as I can get the information from you. So obviously I put down there, you record, you must get their consent. But for the 5 cases, I don't have a chance to record the interviews. Okay, so I'm going to jot down the conversation. Let's move on. Now, what are the findings? Okay. Now, so company A, I indicate the 5 companies A, B, C, D, and E. Okay. Company A is a financial investment company. So basically, this is a service industry, and the short term that they use is turnover and net profit before tax. The long term for the financial is growth in the turnover and revenue. Now, what about non-financial measurement, right? For them, the short term they use is customer satisfaction. What about referrals by customer, which is interesting, right? Because most of the past research do not have this one here, referrals. And the long term, they look into the market share. I said, wow, okay. So it depends on the size now, how many data they have, how many people they are their customers. Then, you say, now look, in the past 5 years, right, we managed to expand from India to Japan, Japan to China, China to Russia, or whatever it is. So the market size has changed. I said that is brilliant. That is a long-term goal and their long-term measurement. Now, the next, interviewee I had is an assembling company. They assemble computers, components. Basically, they are manufacturing. Okay. Now, they use turnover, right? Whatever, when they assemble them really, right, and they sold it. So they use turnover, profit before tax, return on investment, and profit per employee. Now, if you look at this one here, they're using financial as well as non-financial measurement, which is interesting, all right? It's a combination. Now, long term, they use the growth in the revenue, the growth in the number of employees. So that means if they have got about 5 employees now, they now move on to 35, right, within the next 5 years. That is brilliant, okay? So there is a growth in terms of size, in terms of the numbers. For the key non-financial measures, the short term, they use customer satisfaction, the waiting time, referrals. The long term, they use the market share and the growth rate, okay, of the company. Now let's move on and take a look at the company C. It's a recruitment agency. This is a service. Now the turnover is the short term, net profit before tax, employees, profit for employees. The growth in the revenue, growth in the number of employees is a long term. Key financial measurement, customer satisfaction, employees turnover. They focus very much on employees, which is interesting, and also the customers, which is outside. Now, the market shares as well as the growth rate, okay, of the company. Let's move on, take a look at the plastic packaging manufacturer, okay, the manufacturing company on a plastic packaging. The turnover is a measurement, net profit before tax, profit, also return on investment. Now, question is, are they using all of them? Some of them, yes. Okay. Basically, for this company, they use all of them. They want to make sure that the turnover is going up. They make sure that this one is look good and the return is good, right? Now, sometimes the turnover is good, but the other are not good. So that means they will have to take action. Why the profit, return is so bad, right? Is it because the cost is too high or what? Okay, even though the turnover has increased. Now, growth in revenue, growth in number of employees are the long term for the financial. Key financial, non-financial measure, customer referrals, employees turnover, and the market share for the long term. And the last company that I look at is a property realtor or real estate agency, right? Whichever, whatever you want to call it. Now, so it is a service industry. Basically, this company, they are making use of the how much is the turnover, right, in buying and selling houses, and the net profit before tax, return on investment, and the turnover, also the profit employees, okay, per employees. The growth in the revenue, the growth in the number of employees will be the long term. Now, for the non-financial, short term, again, they're focusing on customers. Long term, the market share. Okay, right, let's go on. Now, I summarize them and I ask them, what exactly do you call it short term? What exactly you call it long term? Okay, and they told me it's 12 months. Anything within 5 years is long term. Okay, now financial measurement, okay, seems to be focusing very much on profit before tax, turnover, profit per employees, the growth in revenue, growth in the number of employees, and the non-financial, short-term, customer satisfaction, referrals rate, long-term, revenue, and customer-based market. Now, if you look at this one here, right, a lot of them, they don't focus very much on research and development, which is in the one of the spectrum in the balance scorecard. They don't talk very much about delivery, right? They don't refer very much in terms of warranty returns. Okay, right? But it could be because the 5 companies that we selected for, they focus so happen that it's very much focusing on revenue, customer satisfaction, employees, okay, and none of them talking very much about stockholders. Okay, so that's why I need your help, right? I want you to do more research and do some sort of comparison to my research findings. Okay. Okay. Now conclusion. The owners managers place very equal attention on both financial and non-financial measures. Okay. Financial, I gave you examples already: profit before tax, turnover, profit per employees, and the revenue. And non-financial, customer satisfaction, referrals, and growth in the employers' customer space. Now, these are in line with the goals of the firms and expectation. So back to what we are talking about. Now, if you look at the balance scorecard itself, what are we doing? Basically, we go back and look into the strategy. Are we in line with the mission, vision, and the strategy of the company or the cost center? If not, change course, change direction, change the way that we're going to measure performance. Okay. Now, the respondents normally use about 12 months as a norm to differentiate between short term and the long term, right? Now, as I say, it could be because it is easier to understand and easy to compare. Why short term is 12 months, all right? Because calendar year is 12 months, right? Accounting period is normally 12 months. Okay, so it's easier to do the comparison. Now we went on, what about additional conclusion? So they use turnover, number of employees, revenue, right? And the employees for the number of employees for the long term. Short term, the measure, it helps reflect on the current position, but long term, hopefully, is much more of overall performance of the company. All right. And all these details are in my paper, all right, which I have written about in about 12 years or 13 years ago, right? And this is quite highly sort of reference, and I have got about almost 300 over people cited this paper. Okay, everything is in the Google Scholar. So if you're interested, take a look at the Google Scholar. I have got a whole list of those information. And I have also listed them in both ResearchGate and Google Scholar. Now, what about the way forward? What should we do now? Okay, so let's derive some sort of framework for performance measurement for different sizes of firm and for different sectors. Okay, because different type of firms, different sizes, different sector may have got a different way of measuring performance. So the more research we are doing in terms of this area, the easier and the better for us to come up with a framework that will help us to conceptualize all the possible measurements and indices. Okay. Now then we'll also try to compare the findings across the border. What I've done is in Houston, right? If you can help me, you do your research in India, we can do some sort of comparison, right? Advanced country versus emerging economies. Collaborate in research, right? I'd love to have a collaboration with you, joint publication, and joint bid for external funding. Okay. There are lots of funding outside. There are lots of firms that are prepared to support research. So and those of you who are doing PhD, I'm more than happy to help you and to be your external examiner. Okay, to look into your thesis and to evaluate and give you the feedback. Okay. So my details is here, hgchong@pvamu.edu, and all my research publications are on the ResearchGate as well as in the Scholar. Okay, so that's all. All right. Any quick question you may have? Any quick question? I'm back. Any question you may have? Is there anything on the chat room? Post your question in the chat room. Is there any question that you may have?
Chan. Yes,
Yes.
it was an excellent presentation, of course. And we have one question from the participant. How do we conduct research in this area?
Right, that's a good question. This area you have got to look into two things. Okay, obviously, why you want to do the research. The main thing is, right, what are you going to achieve? The next thing is obviously how are you going to do the research? Okay, now why you want to do the research is basically because you want to get more results, more information for your own knowledge, or you want to share the knowledge. Now, how to do it? The methodology is either you do the like what we are doing, right? Interview, or you can send out questionnaires. So questionnaire will give you a much better sort of result, right? It's not focusing in one small area, but also you can send it throughout the whole country in India, right, and all over, right? And some, you can do, it's much more standardized in terms of your results because, whatever you ask for, you get it back and then you can analyze the results. Interview is quite interesting because they can give you a lot of information that sometimes is beyond what you have asked for. Okay? I learned a lot from the interview, and basically, even though it is an interview for performance measurement, then all of a sudden they told me something. I said, wait a minute, right? That could be my next paper. That could be my next research. That could be the things that I'm going to bring it back to my classroom, right? So these are those things that happening in the real world, right? You can go forward and back with those in the in the industries and those in the practice. Have I answered the question?
Well,
Dr.
well
Kishan?
done.
Okay,
Yes,
thank
yes.
you. Any
So,
other question?
yes. Could you please tell me something about the suggested research topic for our research scholars in the area of performance measurement and its latest trends?
There are quite a number of areas that you can do the you know measuring performance. Okay, so you can look into one particular sector. For example, manufacturing. For example, oil and gas. For example, in utilities. Right, one particular sector. Try to compare what sort of performance measurement KPI, right, key performance indices that they use, right? So that means are they using the same sort of measurement within the same sector? Are they using the same measurement from company A to company B or not, even though they are within the same sector, right? So you can uh, do across the sector, or you can use one firm or two firms, okay, and say, hey, look, can I come in and talk to you about how you measure your performance? Are you comparing with last year, or are you just comparing with your sector, or comparing with what? Okay, are you comparing and evaluate on your mission, right? And what is your look? Do you go back when you have done your planning, when you have done your control? Do you make a decision? Right? So you continue, go back and ask them, hey, look, have you followed up, right, what you have done in terms of your evaluation or not? So I repeat, you can use a sector, right? And you say, now look, I'm going to select 10, 8 companies. I'm going to do and measure their performance. How exactly they measure performance? The second is obviously, I don't worry about a particular sector. I'm focusing on manufacturing, right? As long as they manufacture something, automobile, they can manufacture computers. I don't care, right? Manufacturing. So I check it across the board. How did they measure performance? All right. What sort of indices they use? All right. That is based on sector, based on activities. Now, or the other third one is using the same one or two companies, right? Keep going back, right, and ask them, how do you do your measurement in the first place? How you set the target? How do you come up with the evaluation? Why you use that particular indices? And how do you come back with a look, right? And that could be an interesting case study. Okay. I stop here. Any question? Any other question that you may have?
Yes, yes. So, Dr. Chang, could you please tell me how do performance measurement is interlinked with the performance management of the employees of the organization?
Oh, okay, right. That could be interesting, right? Um, that will be much more relating to HR, human resource, which that is a very important. Don't get mixed up because this topic is much more focusing on firms' performance measurement, organization, the cost center as a whole, not a particular employees. These are called employees appraisal, which is different from firms' performance measurement. Now, also, how are you going to link between the two? Now, take for example, this is a cost center. The cost center, right, has got about 20 employees, 50 employees, right? Now, so we are talking about the performance of the cost center as a whole, not the individuals. Now, so once we know that this particular cost center A is doing very good job because they deliver everything on time, their quality of product is very good. There is no customer complaints. The feedback is brilliant, right? And the number of customer has increased. Market size, everything is expanding right now. So that means we are going to give them more resources for cost center A. Now, so within cost center A, right, there are say 30, 40 employees. Then the individual, they have got to assess their performance, and with that performance, we allocate the resources for the individual, awards, training, prices, fee, right? All these are basically encouraging them. Hey, look, because you are doing well as a group, the company is going to recognize your performance, right? So that's why it comes in with more resources, and that particular cost center will move out, and and they will help them in terms of their uh, results in the long run. But also, don't forget all those that lagging behind. Do not ignore them, right? So how are you going to balance? How are you going to allocate your resources? Performance measurement is very important. And then you're going to use more weighting, right? Okay, because cost center A is doing very well, cost center E is not that good. Now, so how are we going to help each other, right? Don't just have one cost center going up, very good, and the other one is declining and disappeared. So it's still not good, right? Because it will affect your mission, your reputation, your branding as an overall. So you have got to be very careful, and that's why performance measurement is a good way for you to evaluate the performance of the individuals.
Well said, Dr. Chong. We have one question from our own MBA student,
Oh,
first
good.
MBA student, Ms. Swati. He has asked a question in today's post-pandemic scenario where we have work from home strategy. How can we able to measure the performance of the employees?
Right. Okay. Basically, you work from home or you work from anywhere is more or less the same. Okay. Now, obviously, at the end, firms will evaluate in terms of your performance, right? You may not be able to, be in office, from 8 to 5 or 9 to 4, whatever it is. But then, the main thing is obviously, how you deliver. Do you deliver what you promise for? You sign in to be there in a job place for whatever time period. Okay, are you there to respond to the emails? Are you there to respond to the phone calls? Are you responding to the customer's needs, right? Even though you work remotely. So you're all depending on your performance, where you work, and how you deliver it. you know to a certain extent, you may have to do about a bit of adjustment because of COVID. I understand that there are lots of challenges, even in US now. Um, how are we going to sort of like, deliver what we promised for? We are still learning. It's quite a challenge, okay? So that's why, this year 2020 and 2021, right? How are we going to measure performance? Are we going to compare with those in a pre-COVID time, or are we going to do some sort of adjustment? Right? It's in my slide just now. Right? If you look at my slides, right? Unless there is no major change, right? That is a key word, unless. All right. But if now because of major change, COVID, war, or earthquake, or whatever it is, all right. Now, so we may have got to adjust the evaluation process because of the situation beyond our control and expectation.
Dr. Chong,
Yeah.
have one more question from my own mind side. So, where we have always a huge cry between performance appraisal. Okay, when you talk about performance appraisal, so it is again employee satisfaction becomes the biggest challenge. So, how do we balance the usage of appraisal method in satisfying the employees of the organization in terms of performance measurement?
Yeah. Okay. So it's quite a challenge. Basically, staff employees type of appraisal is always a challenge. And normally, what happens is lots of firms they use percentage or weighting. All right. Take for example, this person is very good in technical skills, right? So we put in more weighting in terms of technical area. This person is very good in terms of customer services, right? So that means are we going to put in more weight on those areas that he or she is good at? Because no, I mean, unless I can come up with somebody, there is no one that I know of is an expert in everything, right? Either somebody is very good in technical skills, or somebody could be good in communication, somebody is good in writing, somebody is good in accounting. So you need the whole team and groups of people, all right? And how would the top management or the CEO or CFO allocate the resources to who, right? And they have the instrument is very important and has got to be very transparent. The keyword is transparent, so that everybody knows what are they going to be evaluated for by the end of this year. All right. Are they going to focus very much on in terms of delivery, or are they going to be focusing on how many days you're off from work, how many days you take to deliver your product or services. Okay. So once everything is agreed and transparent, then people will put in efforts and they will feel that, oh, this is part of me and I own it. Once I own it, I put in efforts. Okay. So the key area is, in order for you to measure the performance of the individual and employees, you have got to make sure that communication, have got to communicate with them, tell them, right, this is an instrument, I'm going to use it to evaluate at the end of this year, at the end of this month. Are you ready? Make sure that you are, okay, meeting the target, meeting the delivery promises. Right. So once he or she is aware of it, right, I must finish 5 contracts in a year. I must finish 8 projects in 5 weeks, or whatever it is. I do not know. Okay. So that is the agreement between the senior as well as the employees. So the two of them have got to coordinate and talk and discuss and come to some sort of understanding all the time. So communication is a key word.
Okay.
Any other question you may have from the audience? Don't be shy.
So here we have one more question from our own HR head of department, Dr. E. Nanashekaran. Sir is asking, sir, how do we fulfill the performance measurement in terms of the fulfillment of the strategy adopted by the organization?
Oh, okay. That's an interesting question. Thank you so much, Doctor. Thanks for asking the question. Now, basically, you look at balance scorecard, you come up with the evaluation, financial, internal, and customer as well as long-term strategy, right? So all these, non-financial and financial measurement, once they have got, you have set the target already, you evaluate the target, and then you come up decision making. Now, the decision making could be long-term, it could be a short-term. Now, all this will filter into the strategy in the center of the box. Okay? So your strategy may need to change, update, right, and revise because there are changes from outside. There are changes within the organization, right? Internally within the organization, what we're talking about, the employees, right, have got now. They are much more well educated, well qualified, and they are good in terms of their skills, right? So that means their performance should be much better, right? So our strategy should change. Technology is much better now. That instead of using the old computers, now we have best of the best, right? Software that we can capture all the information that we may need. So all these are internal. What about external? Is there any changes in the political situation or not? What about bureaucracy? What about legal? Right? What about, is there any trade war going on or not? Okay. I'm not talking about particular country, okay? I just give you example. These are situations that may happen, all right? And on top, say take for example during the year, right? Hopefully not, okay? There is a tsunami going on. There's an earthquake going on in somewhere, right? There's a bomb going on. So all these will affect our supply chain. Now, are we going to blame on the warehouse people, or are we going to blame? No, we can, right? Because these are natural disasters, right? So basically, we have got to, revise and review our strategy, and because of the situation, the action plan, right, will eventually impact onto our strategy. Okay? Now, the strategy that we built in is a plan. It's not firm, right? And we have got to review it maybe every 3 months, every 3 years. It's up to you, right? Up to the individual organization because of the changes internally or externally. Okay.
Well said. Yes, yes. Well said, Dr. Chong.
Okay. Is there any other question that
Sir, here we have one more question from our own head of department, okay. Dr. Dhanashekaran. So he is asking, we were all discussing about the advantages of performance measurement as of now. Can you please tell me the disadvantages of performance measurement, the demerits of performance measurement?
Thank you, doctor. It's a good question, right? Now, anything that you're going to do, is taking a lot of time. All right, because if you go around and say, hey, look, employee A, I want to talk to you, about your performance measurement. You're taking away a lot of time from him and taking away your time, right? So time is one thing. Now, when you lost your time, you lost opportunities. That is a thing that nobody can measure, right? Now, for us, accounting is quite straightforward, right? How much time you spend? 3 hours. Because I'm talking through with the employee, 3 hours multiplied by my time cost, I know how much is the cost. But I cannot measure opportunity cost. Because I was talking to my employees about performance measurement, I lost 3 customers. Right? So these are the opportunity costs that I lost. So basically for accounting, quite straightforward because we can measure by the cost. For economics, it's quite a challenge, right? They always ask me, how are you going to measure opportunity cost? I say, no way, because you do not know what are the opportunities that you have lost. So the same thing happens to, right, you have got, because of limited resources. So these are the, how are you going to make use of the limited resources that you have? Are you going to get your employees to come and talk to you for X number of hours in a week, in a month? Now, fine, they can talk to you. They are going to sacrifice a lot of things in terms of production, in terms of customers' care, right? In terms of complaints or whatever it is, okay? And the employees may not be happy, right? So we have got to weight it. Performance measurement is quite straightforward, but then the good thing is there, right? So you can evaluate, you can plan ahead, but the bad thing is obviously, time consuming and the resource as well. I hope I answered the question.
Yes. Very informative presentation, Dr. Chong, and where we have very good response from the participants also.
Okay.
And and here I have, of course, this is also an out of the topic. When I say out of the topic, because here we are talking about the performance measurement of small and medium-sized firm, and how do we measure the performance of the faculties with regard to the performance of the student as an organization as a whole in a service sector.
Oh, okay. That's interesting. Okay. I'm a faculty myself. Okay. Now, how are we going to measure the professors? Okay. Now, basically, normally faculty have got three areas in terms of delivery. One is teaching, research, and services. Okay. That's how we normally do it. Now, some schools may have got, focusing on, say, 50% of their performance based on teaching. 30% is on research. 20%, right? The balance 20% is on services. Okay. Now, let's talk about teaching. How are you going to evaluate students' feedback? Any complaints from students? Any sort of like things that the professor missing classes, never grade the paper on time, never respond to the student on time, right? So that's why the department head have got to be very careful in terms of evaluating the professor's teaching, right? 50%. 30% is quite straightforward research. Okay, how many papers have you published in 5 years, right? There are professors who never publish anything, you got 0 point. There are professors who publish, 5 papers in 5 years. Brilliant. Okay. Now, I don't expect anybody to publish 5 papers in 5 years. I expect, a professor to publish 3 good papers in 5 years. So if a person can publish 3 papers out within 5 years, they got 30 points. Now, what about services? Okay. How much he or she have been engaged with student organization? How often the professor have been out about and talked to those in the community? How the professor have been out and about meeting up with the parents, or any activities that the university is organizing? Okay, so these are the services, because all these will help publicize the school and the university. And not only that, right? A lot of time, if an employer, okay, say take for example, big companies, when they meet up with a professor, wow, okay, you are professors, you come in and talk to us, and what can we help you? I say, now look, I want you to hire all my students, okay, from whatever MBA class or right, there you are. So basically from there, right, you build relationship with the customers, right? And you know about what are the customer, that means the employees. Okay. So in the sense that you are interacting with them, and you can help you to update and upgrade your own your syllabus, and revise your syllabus, and you can give it back to the students, all right, for case study, for discussion purposes. Okay.
So
Again,
one last question, Dr. Chong. One last question.
oh, okay, okay.
Okay, from our own organizational for our own team, for a smaller team organization like startup, how do we measure the performance of the organization?
You're referring to startup, is that right?
Startup.
Now, startup is quite a challenge, because normally, if the let's put it in this way, if the startup can survive in 5 years, it's a success. Right? Normally, we don't evaluate very much on those startups, okay? Because they are starting, they are fighting fire, they're going around, right? Looking for resources. They don't have time for any other things on evaluating the performance, right? So they are basically looking for customers, getting the market in, get the products out, getting very excited, right? Because they are, have got to rush for time, get the resources in, get the right people in to balance it, for the organization. Now, for the first 3 years, okay, if they can get through, they're okay. Then you start to evaluate normally after 5 years, 4 or 5 years. Then you can look into, right, okay, how many startup, okay, in, Tamil Nadu, right? How many of them are successful? That is a performance measurement. How many of them, is it any particular sector that they are successful? Oh, okay, IT, brilliant, right? So that is how you allocate your resources, right, into the cost center. And that's how, the support should come in. Right, these are the sectors, these are the organizations, these are the firms that they are doing a good job because, they are the one that hiring people, they are the one that generating jobs, they are the one, making profits. So, even though, within 2 years or 3 years, they just zoom out, okay? And they are doing a good job, all right? So the startup is quite a challenge in terms of your measurement, unless you have got, a comparable type of companies within the sector or even outside the sector, right? But it is a quite interesting result if, if any one of you can come, do some sort of measurement, performance measurement. I would like to read the paper, okay? That could be interesting. That could be an area that, we can look at.
So, of course, you were very patiently answering all the questions which were posted in the chat history.
Okay. Any other question that, anyone else have got any question?
Yes. So most probably it is the time to wind up the session.
Okay, right.
It's
Okay.
already late for you in Texas, according to Central Time. Dr. Chong, tell me what could be the exact time at CST, Texas now?
It's about 12:45.
12:45
a.m.
AM. So it is very much honor for us to have with you,
Thank you.
even late tonight. So any other questions? Probably we're going to wind up the session. So I express my sincere gratitude to Professor Chong for accepting a proposal in sharing in-depth perspectives and experiences on the topic performance measurement of small and medium-sized enterprise. I request all the participants to stay connected with us. So we have scheduled another event on 1st of July 2021, national level virtual symposium on the theme Unbox Your Career, How to Conquer the Challenges and to Plan for an Exciting Future by Dr. Vengadamini, Chartered Accountant, Dean, Amity Business School, Chennai. Dr. Chong, so thank you very much for your patience, cooperation, and coordination, and spending with us your valuable time and sharing your knowledge and experiences. Thank you, participant from India as well as from abroad who are connected digitally today to make this event a grand success. Thank you once again to all of you. Have a pleasant day. Visit our event page for registration and update. Now we will chat. We will, yes, thank you, Dr. Chong. Dear participant, we will share the feedback link in the YouTube chat history. Kindly fill the link and revert back to us for getting the certificate. Thank you, Dr. Chong.
Thank you. Right.
Thank you.
Right. We stay in touch. Right. Take care. Right.
Yes.
Bye-bye.
Thank you.
Have a good day, everyone. Right. Take care.
Yes.
I hope you enjoyed the presentation.
Yes. It was an excellent presentation, Dr. Chong.
Right.
Thank you.
Bye-bye.